Hello, everybody. So today I want to talk about STRK. I want to talk about the new ticker of MicroStrategy, which is going to be the preferred shares that go by the name of STRK. And you can see this is the Fidelity IPO window from January 27 to January 30th. They're offering $250 million of shares. Initially, a lot of people made the mistake of 2.5 billion, like bigger channels than me also made that. So thank you for pointing it out in the comment section. Yes, it's 250 million. It doesn't change the fact that he talked about the ATM. And so he talked about in the prospectus about doing more ATM. So I do think that this will increase. And as he does ATM on that STRK ticker, we are going to get to 2 billion and perhaps even higher than 2 billion via secondary share offerings via way of an ATM. Because he did mention that the big advantage of STRK is now you're going to have two instruments on which to ATM. MSTR and STRK, except when you're going to do the ATM on STRK, because it's a preferred equity, there's not going to be dilution. You're going to be ATMing at par, and this is going to be quite interesting. Of course, we don't have the details of that, so I look forward to getting the details on that. But there's two things I want to talk about today, and that's based on this special roadshow presentation that he made. But I want to talk about two things today. So first of all, we know the yield is going to be 8%. And then I want to talk about the 10% of MSTR stock perpetual STRK. It's called STRK. The ticker is STRK because these preferred shares have a MSTR perpetual STRK of 10% of MSTR, or $100 initially, as it is at par. It is the issue at par. So let's go ahead and let's get started. And you're going to see this is going to get very interesting. In my view, I find this very interesting. So first of all, let's talk about the 8% yield. I want to point out, I don't have a chart of the yields right now, but the yields are pretty much at all-time high, maybe 10% away from all-time high, but the long yields are very high right now. We are not in a normal low yield environment. And so a key thing to understand is that the yields are going to drop. The yields are greatly going to drop. And so you're going to have a lot of people that are attracted to the MicroStrategy STRK stock, preferred stock, because of the 8% yield. In fact, that 8% yield is higher than I thought. You remember, I thought it was going to be 6%, in line with PFF. So PFF is the main ticker symbol for the ETF that holds a basket of 441 preferred stocks from 441 companies with all sorts of businesses. It's the main ETF. It's got almost 15 billion of assets under management. It's managed by BlackRock iShares. That ETF right now pays 6.01% a year. And of course, you got to subtract to that the expense ratio. So really the yield that you're getting is 5.55% a year versus MicroStrategy yield of 8%. It's a much higher yield, point number one. But then point number two, PFF, of course, is backed by a lot of very old world companies. There's a lot of real estate in there, commercial real estate, office, right? There's a lot of telecommunications in there. Are you confident in that? I don't know. Apple just announced the partnership with SpaceX to connect directly to SpaceX. So do you still want to be, getting a preferred issued on landlines from 20 years ago? Anyways, the PFF is based on real-world businesses with real-world business risk, random business risk. And that's why they diversify across 440 companies so that probably a few of these companies will go bust, but overall, the yield will be maintained because you diversify your ignorance. Now, MicroStrategy, though, what is that yield going to be backed, but more importantly, the capital, the par. What is the par? What is the principal going to be backed at? The principal is backed by Bitcoin. And of course, if you're a believer in Bitcoin, which I don't anticipate anybody watching or considering MicroStrategy is not a believer in Bitcoin. If you're a believer in Bitcoin, then to you, that's a much better collateral than a basket of 441 companies with separate business risk. Because people who are going to buy STRK, a prerequisite to touching any MicroStrategy instrument, a prerequisite is to be bullish on Bitcoin. That's a prereq. And so the market, in my view, is going to be very happy of having a yield that's higher than the PFF. So all of you other preferreds, and not only is it higher, but it is also backed by arguably a better asset, which is Bitcoin. And so that's why I think this product is going to be a hit, and it's going to be even more of a hit because of this. What do you think will happen to the 8% preferred, to the price of the shares? I'm talking about this. What do you think will happen when the rates inevitably eventually drop? Because the rates will drop. In my view, the Fed has no choice. So give it 2 years. Let's assume in 2 years we are back at a 1%-ish Fed funds rate, roughly the rates between 0 and 1.5% within 2 years. Let's assume that, which is my thesis. This is what I assume is going to happen. So if you look at the iShares preferred, the stock dropped 21% since the beginning of the tightening in interest rates in late 2021. It dropped 21%. PFF, when the rates drop back to where they were in 2020, 2021, PFF is going to gain back of its value, right? It's no financial advice, of course, but it's how bonds work. Bonds work in reverse. When rates go down, bond prices go up. And the same is true, of course, as I just shown for preferred equities, preferred securities ETF. So, but the yield, of course, this is on a 6% yielding asset. MicroStrategy is going to be an 8% yielding asset. So that's why I'm willing to go out on a limb here and say that I think the strike preferred stock could go up by about roughly 30% if and when rates drop back, I'd say in 2 years, to inevitably a 1%-ish, right? So there's a built-in gain from the expected drop in interest rates, point number one, and then you collect your 8% in year one and collect your 8% in year two. So over 2 years, you're getting a 46% return, potentially, no financial advice. But that right there is outperforming the QQQ alone. And this alone is why I believe this is going to be an oversubscribed preferred stock. This is going to be oversubscribed, in my view, due to these advantages. And so that's point number one. Now, point number two that I want to talk about is the bonus, the icing on the cake for the buyers of Strike. The icing on the cake is the fact that you get that 100% strike, of course, so that you can redeem at par, or 10% of one MSTR share. And so this starts to matter, right? The perpetual call that you have embedded with that, it only starts to matter once MicroStrategy exceeds 1,000 a share. It has 2,000 a share. It has to exceed 1,000 a share for the 10% to be worth more than 100. And so this is where it gets interesting, because by issuing Strike at peak interest rates, I anticipate, well, let's say this is a very positive anticipation, right? As you saw, I was closer to like a 146, right? But let's be even more positive. Like let's assume in 2 to 3 years, maybe 4 years, you have Strike trading at 180, so 80% above par. Let's assume that. Well, then that means it would make no sense to redeem your stock at 100 if it's trading at 180 on the one hand, and then on the other hand, it would actually only make sense to redeem for 10% of a MicroStrategy share if those MicroStrategy shares are at 1,800. In other words, if people ever get to redeem on the Strike preferred, that's going to be at a very, very advantageous positioning from MicroStrategy. It will mean that MicroStrategy stock will be very high. And when do we see that happening? When could MicroStrategy for that option? MicroStrategy needs to have explosive growth. And by when does my spreadsheet? I have a valuation model of MSTR. By when does it see this happening to MicroStrategy? Well, in my base case, assuming that it stays unchanged, you would get December 2027 or December 2028 is when potentially the 10% of one MSTR perpetual Strike may hold more value than the preferred shares themselves. And then you have to ask yourself, in an evaluation of Strike, how does that 10% premium, how does that get embedded within the share price? So it's essentially, I'm bullish on this asset. I think it's an asset that is going to have lesser performance than MSTR common. I still know full well that MicroStrategy, Michael Saylor, as he said on multiple calls, he works for the common shareholder and the common shareholder alone. So I still think the common is going to be better. But this product is going to fit a need. It's going to fit a need of income-oriented investors. It's going to fit the need of retirees. It's going to fit the need of people who may be very bullish on MSTR stock, but maybe they quit their job, maybe their wife quit their job or whatever, or something like that, and they need some income, right? Some people may need some income. So this really fits a dual purpose, and without necessarily the risk of writing options in MSTR and the risk of losing your shares. I think this is going to be a well-subscribed preferred share, and as I showed video, MSTR sees itself as a refinery, right? And so Strike is going to be the ticker, and it's going to be the MSTR dividend right here is what they're going to pay, and that's the lower end here of the refinery. So anyways, this was not financial advice, not investment advice. This is just entertainment. I'm hoping you were entertained. Please like, please subscribe. Thank you for watching, and have a wonderful, wonderful day.